Geoff, it's great to see you, first of all. And I want to talk about this sort of ripple effect and how it could be affecting the VC landscape. Obviously, we have not been seeing a lot of IPOs in the market. In fact, Politico recently said, they talked to somebody in the VC world who said the lack of IPOs has constipated the VC system, which I found very evocative. It backed up.
I don't feel constipated, for the record, just to be clear.
Okay, so tell me what you're, let's not get too personal here, but tell me what you're seeing in the business and whether things are backed up, so to speak.
Absolutely. I mean, I don't expect there to be any IPOs in the near term. CoreWeave did a really nice job of getting out. I think the extent folks want exposure to OpenAI in the public markets, that's a name that I would track quite closely. But at this point, things do seem really backed up. I mean, the basic challenge is when you have this much volatility, it's just extraordinarily hard to plan. And I do think we do have a secular shift. This was happening before the new administration and is definitely accelerating now. But there's a secular shift towards the best companies in the private markets just staying private for much longer. And I think that is just going to continue to get accentuated over the years to come as we're in a new, extraordinarily volatile macroeconomic environment.
So Geoff, in your opinion, does that actually perpetuate potential bubbles sort of in the VC or private equity space, right? So if these companies aren't going public and they're staying private, does that actually see sort of investors continue to plow in at higher and higher multiples, or does that sort of get worked out with all this uncertainty?
It absolutely perpetuates bubbles in the private markets. VCs, I always get in trouble when I say this, but VCs are notoriously bad investors. VC is an interesting asset class in that 99% of the VCs, if you invest with them, you lose money. And there's sort of 1% that are good and know what they're doing. And so it's a hyper bifurcated market, and you don't want to be in the median VC. You have to be in a top decile VC firm. So absolutely, we're seeing extraordinary bubbles right now with AI, with reshoring and onshoring manufacturing. Arguably, there's somewhat of a bubble in defense technology right now as well. Certainly, enterprise SaaS has been in a bubble for many years. And then the corollary to all of this is there are these corner cases and counterexamples where every hyped up sector, there are these one or two singular transcendent companies that end up emerging. So here at Bedrock, we're extraordinarily long OpenAI. We were one of the earliest investors there, one of the largest investors there. We think that is a singular winner in this AI boom, and we're very long there. In things like infrastructure for public safety and security, we're very long a company in the private markets called Flock Safety, which works with law enforcement agencies and local communities to help keep them safe, help them thrive. So there are these narrow opportunities that we're very bullish on, but absolutely, there are extraordinary bubbles in the private markets, and you definitely want to avoid investing with the median VC, that's for sure.
Geoff, in VC investing, you got to be patient, right? That's one of the sort of hallmarks of it. I wonder, at a time like this, with the tariffs, with the macro environment, even for a company of the size of OpenAI that's expected to see the growth it's expected to see, do you have to be even more patient for it to pay off? Given some of those, in other words, is it vulnerable, at least from a timing perspective, to some of these macro headwinds?
I almost look at it as the least vulnerable of the companies in the private markets to the macro headwinds, because you have such an extraordinary parabolic growth story with ChatGPT. So if we even forget about OpenAI's API business, if we forget about OpenAI's enterprise business, if we forget about all of the future plans and announcements that they've already made and the announcements they haven't made, just the ChatGPT consumer product is, by my measure, by our measure here at Bedrock, the fastest growing consumer internet product of all time. And in terms of daily active usage, monthly, all the core metrics that you'd measure a consumer application via, the growth is just exponential, and it just keeps accelerating.
But I guess what I'm asking is if people are cutting back, right? If somebody loses a job, or if other things cost more, is that going to be one of the things that they're cutting or maybe not signing up for in the first place?
Absolutely not. No, it is something that is just mission critical infrastructure for daily life. Once you're a user who knows how to use ChatGPT, my thesis, our thesis at Bedrock is that becomes mission critical infrastructure for you on an everyday basis that makes your life better, that solves problems for you, that helps you navigate important decisions, and really is eating a lot of what historically would have been Google's search share. So our view is that is a beneficiary of the volatility, because when you're in a extreme uncertain environment and there's tremendous volatility, there's all these headlines, people don't know what's going on, something that helps you navigate everyday life as a consumer, something that helps you plan as a business in a hyper volatile environment, intuitively that goes up in value. That would be our view here at Bedrock.
Geoff, unfortunately, we have to leave it there. I always want more time with you, but we don't have it. Thank you so much. Appreciate it.
My pleasure. Anytime. Be well.